beauty of using a mortgage broker is that you don't need to work out how much mortgage you can afford. All you need to do is contact us and we'll give you a hand with that. So we'll go through your income, your expenditure, and then we'll be able to advise the absolute maximum that you can borrow, combine that with the deposit that you've got so that you know exactly the maximum purchase price you can potentially stretch to. If you're looking online yourself, you might just look at one particular lender, but because we're whole of market and we've got access to every single lender, we can look at them all, and often it might be a lender that you might not even heard of that will actually lend you a little bit more than another one. In terms of the application process, it will vary on individual circumstances, but we are able to get you an agreement in principle same day. I've had clients this week that have had an offer accepted in the morning. I've been able to get them an agreement in principle in the afternoon in order that the property is taken off the market and removed from Rightmove that evening. The process thereon can vary again, but typically if there's not much of a chain, then you can expect to move into your property in around 3 months. But clearly that will vary based on the individual property and the chain involved. An agreement in principle is a term that's thrown about and often you might not know what on earth that is. Well, all it is, it's the initial part of the mortgage application, and it involves us running a credit search on you just to make sure that you pass the credit score and there's no issues from that point of view. You then get a certificate from the lender to say that you can, in theory, borrow that amount of money, and that's what you need when you're going to make an offer on a property, because as soon as you make an offer, the estate agent will ask you, how are you going to pay for it? And once you've got that certificate, you can say, I've got my mortgage in principle here, here's the contact details from my broker, and hopefully they'll accept your offer. So the clue is in the name with this really. A fixed rate is fixed, and it's for that defined period. So you will often have a 2-year fixed rate or a 3-year fixed rate or a 5-year fixed rate. The rate is fixed for that period, and at the end of that fixed rate period, we'd then be in touch again and we'd set you up usually on another fixed rate. Now the other option is a variable rate mortgage. That will go up and down with changes to Bank of England base rate, if it's a tracker rate which tracks the Bank of England base rate, or it might vary with changes that that specific lender chooses to make to their rate. So a variable rate can go up or down, whereas a fixed rate will stay the same for that specified period of time.